Transocean just shocked the market. Rig stock exploded more than 10% in a single day, closing right around $6. And this wasn't random, this wasn't hype, this was a power move. If you're a retail investor watching energy stocks right now, you need to pay attention. Because this story is bigger than one green day. It could signal a major shift in offshore drilling. Let's break it down. First, the headline move. Transocean announced it's acquiring rival offshore driller Valaris in a deal worth about $5.8 billion. $5.8 billion. This surprised Wall Street. Because this isn't just another small acquisition. If this deal closes, Transocean becomes the largest offshore driller in the world by market value. 73 rigs, roughly $10 billion in backlog. That backlog number is critical. Backlog means future revenue already locked in. In the offshore drilling business, visibility equals survival, and investors love visibility. Now pay attention to this. Management expects more than $200 million in annual cost savings from this merger. That's serious money. In a cyclical industry like oil and gas, scale is everything. Bigger fleets, stronger pricing power, lower costs, more stable cash flow. That's exactly what Transocean is trying to build, and the market clearly liked the strategy. But that's not all. Almost at the same time, the company announced something else. $184 million in new drilling contracts. 2 harsh environment rigs in Norway just secured extensions. One contract worth about $152 million, another worth around $32 million. And these contracts stretch into 2027. That means guaranteed revenue for years. For retail investors, that reduces uncertainty. And when uncertainty drops, stocks tend to rise. Now zoom out. This wasn't a one-day wonder. Rig is up more than 45% in the last 3 months. Offshore drilling activity is heating up in the Gulf of Mexico, Brazil, Guyana. Energy is currently one of the strongest sectors in the market. Money is rotating back into oil, and Transocean is riding that wave. The stock is trading well above its short-term and long-term averages. Momentum traders see it, institutions see it, and that creates fuel. Analysts are starting to shift too. Some price targets move to $6. Some reports suggest numbers as high as 10. That's a massive gap compared to where this stock was not long ago. On top of that, credit agencies place the company on positive watch. That means a potential credit upgrade if the deal closes. Lower borrowing costs, better balance sheet flexibility, that matters in a capital-intensive business like offshore drilling. But here's the reality check. The deal is not closed yet. It still needs regulatory approval, it still needs shareholder approval, and that process runs into the second half of 2026. So yes, this is bullish, but it's not guaranteed. Also, the stock is hovering near its 52-week high. That can mean breakout potential or short-term pullback risk. Momentum indicators are bullish, but not extreme. So volatility is still on the table. Now here's the next major catalyst. Earnings are coming up. Wall Street expects around 8 cents per share in profit. That's a huge improvement from last year's loss. Revenue expected around $1 billion. If Transocean beats earnings and management sounds confident about the merger and offshore demand continues improving, here's what could happen next. We could see a breakout above recent highs and momentum traders piling in. But if earnings disappoint, this stock can drop just as fast as it climbed. That's the nature of energy names. High beta, high volatility, high opportunity. So what's the big picture? Transocean just made a bold, aggressive move. Instead of playing defense in a cyclical industry, it's trying to dominate it. If offshore drilling enters a multi-year upcycle, this merger could look genius. If oil prices weaken or the deal struggles, the risks come back quickly. This surprised Wall Street because Transocean didn't just sign a contract, it reshaped the competitive landscape. Now, everything depends on execution. So here's the real question. Is offshore drilling entering a multi-year boom, or is this rally getting ahead of itself? Are you buying RIG here, taking profits, or waiting for a pullback? Drop your strategy in the comments. And if you want more fast breakdowns on stocks moving right now, make sure you're subscribed, because in this market, speed matters.